Good afternoon. George Cavaligos from the floor of the CME group. Guys, it's Friday afternoon. It's been a quiet day, an interesting day. Take a look at the note charts and the bond charts. On an hourly basis, this morning we saw new lows in the bonds, but the 10-years didn't follow through. So we're seeing these continued divergences between the different sectors of the curve. And obviously those have some meaning for the curve traders, guys that are trading one sector of the yield curve against the other. A little bit of steepening going on. I still think this is kind of a corrective fashion move. I think as long as equities are rallying, the curve will tend to steepen here. Equities are still rallying, obviously. Their S&Ps are up 17 handles. The Nasdaq's obviously very strong. It's up 30 handles again today. I think today is, what, day 7 or 8 straight up in the Nasdaq. Obviously, it's a short squeeze of some type. It's got more to go. You got to be patient if you're looking for the bear side of the trading card when you're trading equities like I am here at this point. Let's see. Back to the 10-year. 10-year went down. I threw out some important support levels, 127.29. The market actually traded down to 127.25 this morning. Hopefully you were able to put a small long on there. That was the favored trade. Market bounced back up. It wasn't a home run, but we're in that sort of scalpers kind of range trading mentality right now. The market is consolidating down here. We don't know whether it is a consolidation before resuming the down move or whether we're building a base here. We don't know that yet. It'll be pretty obvious when we move outside of this recent range with volume and vigor. We'll know. It'll be pretty obvious. Right now the range, we could see it. It's 127.5 to 128.5. Typically these things will end with some kind of a whipsaw. My favorite count shows the market going higher here at some point over the next week. We can trade up to 129 even, 129.15. That would be my perfect trade, where you bounce back up to the old breakdown point at 129.14.15 and then resume the bear move from there. We'll see. We're not there yet. It's Friday. We've had a couple days of sort of sideways chop and trading this range. Again, the longer we go in this range, the better it is, obviously. We are looking at a possible rule of alternation pattern here. We speak of Elliott wave. Elliott wave has one very solid rule, that corrective patterns alternate in form. It's called the rule of alternation. If you look at the move in the notes on the way down, we had the highs at 131.30. We went down low 129 evens. We bounced back up to 131.12. That move from 129, what was it, 02, 06, I can't remember exactly, up to 131.12, I'm labeling that wave 2 or wave B. We had then the sell-off from 131.12 down to whatever, 127.16 is the recent low. And now we're going through this consolidation pattern again sideways. I'm labeling this either wave 4 or something beginning of another wave to higher highs here. We don't know yet. The fourth wave has to be different than the second wave. And if you look at the second wave, it lasted 5 trading days and was a simple ABC up. That means this current consolidation has to be longer and more complex. So far we've had like this choppy 1, 2, 3 up. I think we can go down, chop around. We're going to chop around some more is what I'm trying to say. So sideways to higher trading pattern. Typically what you'll like to see is a fourth wave, if it is a fourth wave, twice the length of the second wave if the second wave was simple. The second wave was simple and it was fairly short. So we're looking for a complex fourth with a longer time frame. Basically what I'm saying is we're going to chop around here for a few more days before we can get some resolution to this move, whether it's a base or whether it's a consolidation. My favorite count is it's a fourth wave consolidation. It will eventually resolve itself into new lows for this move down. We'll see. We're not there yet, but we can continue to trade that range. All right, what else? Gold. Poking around the 1685 area again. We have a minor upside reversal trade today in gold that projects a move just above that high at, what was it, 1691 or 1693. So if you're trading gold, you want to be small long, but you want to be nimble there too. I think there's more consolidation pattern type trading going on there. If you get it up to 1691, 1693, get out of your longs and move aside. Equities are still bid. Obviously we're going to have some more upside. Next week is option expiry week in the equity options. Typically, the early part of the week in OPEX week is bullish for equities. We'll let it run. I'm not going to look to try and pick a top unless we get some solid reversal behavior here, and I'm not looking for that probably until Tuesday. The market is extended. It's ripe for a correction. Let the market tell you when that's going to correct, all right? Have a great weekend. Here's the disclaimer again, guys. Futures and options trading is very risky. It's not suitable for everybody. Make sure you are knowledgeable as to the risks that are involved in this business. Have a great weekend. We'll see you Monday.